Good morning, trade pros. Welcome to our morning market update for Friday, January the 4th, 2018. It's Friday, Vic. Friday. Friday. No, that's for people who hate their job. That's not us. I wish it was a Monday, but you know what? No, I don't. I'll take the weekend. All right, so for today, we had a huge day. We had the private jobs report today. We're going to talk about that. We're going to go into an obscene amount of details for Apple, which I think is interesting because it's very telling for the overall market. And then we're going to end off talking about the jobs report. All right, so we're going to start with Apple, not because it's most important, but because it's how I wrote the notes. But before we do all that, morning market fun fact. On this day in 2000, all right, long time ago, almost 20 years now. Wow. The NASDAQ plunged a then record 229.46 points, or 5.55% to close at 3,900. Victoria's a NAS trader. Yahoo lost 1/3 of its value in that one single day, right? So that was kind of the tech bubble imploding. The tech heavy index fell 3% to 64.63 on Thursday, and we've rebounded since. We're on a little bit of a rebound, but let me tell you what the scary part is here about Apple and why it's such a massively owned stock by institutional money that I don't even think people realize the depths to which Apple forecasts or works with the economy. So look at this. Yesterday's 10% slide was the worst since January of 2013, pushed the stock to its April 2017 low. Shares fell by 39.1% since October 3rd of Apple. Almost 40% since October 3rd. That's less than 3 months. All right. The market cap is now $674 billion. Remember, it briefly crossed the $1 trillion marker. It shed nearly $75 billion of the company's market value in one day, which is the size of Qualcomm, General Electric, Morgan Stanley, or Caterpillar. Any one of those firms basically evaporated in that move. So huge drop. Here's why it's important. The company is held by 266 U.S. exchange-traded funds, which is a way of passing that ownership to retail investors and that diversification, representing a total of $46 billion and more than 1% of all ETF assets across the board. In fact, it's such a big stock and a darling to hedge funds and institutional traders that Swiss National Bank, as of September 30th, held 15.8 million shares of Apple stock. Assuming it hadn't changed its holdings, they suffered a 1.4 billion drop yesterday alone. All right, and you know it's really starting to hurt people. This Apple stock, it's served a beating to everybody. It's one of the biggest tech names. It's on the Dow, and it's a huge company to track and follow for correlation. So I kind of painted the picture for you as to why. A few hedge funds have lost north of $500 million on Apple, and it's a bloodbath out there. However, as we go into the market today on a Friday, we're rebounding, and we're seeing a little bit of a rally and comfort from investors. Remember this, stock markets, especially, let me rewind that a little bit before I say stock market. Bearish markets or down markets open strong and close weak. And never, ever forget that, because that, oh, are you kidding me? Hang on. Donna said no YouTube audio. Is that true, guys? Yeah, there's audio. Are you sure? Can you guys put a little hello in the group chat if there's audio, please? Anyone participating? Nobody. Okay, it's working. All right. So anywho, remember this, bear markets open strong and close weak. Very, very important to know that factor, because we're opening strong today. The question is going to be, after the U.S. Open, will we hold that momentum? And something big happened today that we're going to talk about. First, let's go through the markets. Japan's down 2.3% after opening from holidays today, and it's feeling the losses after reopening. That's normal. But other than that, Hong Kong's up 2.2%. China's up 2.1% on some positive economic data. In Europe, all across the board, we're green by at least 1 percentage point. And futures in the United States are down about 1%. So we're still kind of looking to stabilize near lows. And yesterday's down bar didn't have as much volume, and it was absorbed with some bids and buy volume. So I think we're going to see a little bit of a broader market pullback or a rally. Just don't forget the context of the trend. We're still downward and this rally is an opportunity to maybe sell one more time. Watch the volume, because if volume is low on this rally, we're going to continue lower. It's normal to close out a Friday on optimism going into a weekend, and it's interesting to see what we're going to get. This morning we're opening strong. Very important to see if the bears take over. If the bears take over, we might have a really disgusting down day. If they don't, then we're going to rally up until the close. This morning I'm looking to start selling rallies and then converting to buying dips in the early afternoon after the reversal hour. In fact, maybe even mid-morning to early afternoon. But what we get, we never know until it actually opens up. Huge economic data point today was the non-farm employment numbers. I went into great length and detail for the Elite Trading Room, and in fact, we actually traded this event live with our Elite Trading Room team, and we did all right. We made some money today trading the event, but I made some handles on the way down, and then I took a stop on the way up to finish still positive, which is good. It's a good start today. We still have the regular session, plus we have oil inventory today. Yeah, so we got a lot. We got oil inventory at 11 a.m., natty gas inventory at 10:30 because of the market closures, and 10:15 Jerome Powell speaking along with Janet Yellen and Ben Bernanke in Atlanta for the American Economic Association annual meeting. We have a member of our TRADEPRO community who's been around for a long time, senior member, not by age, well, actually by age too. Sorry. That's in Atlanta. We're going to see if we can get him to go in outside the halls and peek in the window and see what happens. All right. So that's the economic calendar for today. The numbers for the non-farm payrolls came out at 312,000 jobs today, way higher than 184,000. And private payrolls smashed expectation. Manufacturing payrolls beat. Everything beat. Prior number, last month's number in November, was revised higher from 155 to 176. Prior payrolls are also revised higher. Looking at just the headline number, the most retail traders look at, it's like it's Christmas all over again. It's the best economic report in ages. Then you look at it a little bit more through the lens of a professional trader, and you start to see the cracks in it. Now, let me explain the cracks. Average hourly earnings were higher, which is great, 0.4% versus 0.3%. Year over year, it was also stronger, so people are making more on an hourly basis. But the unemployment rate edged up to 3.9%. All right, from 3.7 to 3.9%. So the unemployment rate went up. Yes, people are making more money. More jobs were added. Remember, though, the month of December, job additions are what? Could be temporary for retail. So we're going to have to look deeper into the sectors that jobs are added. Manufacturing did a little bit better, which is great. But if you look at this report, two things are worrisome about this. Number one is that the unemployment rate, hold on, that's going to, one squawk and I'm going to blow my eardrums. The unemployment rate was higher. That's not good news. But more importantly, remember that jobs are a lagging indicator, especially hourly earnings. If you're making more money in your current job, that's a reflection of past strength in the economy. The real important one is number of jobs added, because employers are taking a risk by hiring new staff. We know what happens in a recession. Any of us that have been old enough to work in a corporate life through recessions know what happens. People get fired and the job still gets done. You're working for 4 people, and you know that's what I decided. I wasn't going to mesh into that environment. I couldn't integrate, so I had to leave. But anywho, so average hourly earnings are up. That's reflective of the past. Strong jobs number, which is good. A lot of it is seasonal, and it's going to be interesting to see. But this unemployment rate creeping up, it's a little bit of a mixed signal. You're going to see it printed as very positive in newspapers and outlets, and the market may respond to it positively because it's a Friday and we need to rebound. But the rebound is based on the fact that we've had a really big down market. It's just time for a little bit of a pullback. So don't get it confused. It's a great report on the headline, but it's not fantastic when you really dig deep into it. But that being said, we had a beat, and it was interesting. Now that we've beat on this jobs number, the Federal Reserve is probably looking at this and saying, look, I know we told the market that we're close to the neutral rate. The market is now expecting, some people are even expecting a rate cut in the first quarter of 2019. Remember that the Federal Reserve this year could raise rates at any meeting. They don't have to wait for March, June, September, and December like they traditionally have. Jerome Powell changed that every single month is a live meeting. Did you guys see this? A fluff from my jacket, the fur. Every single month is a live meeting. So now, with a stronger headline number, the Federal Reserve has an excuse to maybe raise rates one or two more times, get to the neutral rate, and then taper it off. this market continues to go down, though, I think the Fed will stop hiking rates. And if we get another 15% drop in equity markets, the Federal Reserve will probably start cutting rates and putting more stimulus into the marketplace. That's what we call the Fed put. The Fed is ready to help the market out. And Jerome Powell falling in line by saying we're close to the rate is following the pressure of Donald Trump to stay a little bit more neutral in their policy. So a lot of interesting stuff is happening right now. This report was massive today. Let's see what happens for the rest of the day. I got to tell you this. Let me just turn around for a second and see. I think sell rallies until we pop some overhead resistance. Then you got to start buying the dips. We're strong into this morning, but it's all about the U.S. Open. That's where volume and liquidity comes in, and a lot of institutional traders are going to have their say. Today, more than ever, I'll give you this one rule. Wait the first 5 to 10 minutes. Don't jump in right at the open. It's going to be a lot of opportunity all day. And around 11:30 a.m. when European markets close, just get out of the office because it could get choppy. All right. The Monday after a non-farm payroll report tends to be quiet. So if there's opportunities, step on it today because you may not get as many opportunities on Monday. That's what I got for you guys today. I hope you enjoyed today's morning market update. Now we're going to go over to the trading room, set some levels, and get prepared for the open on this last day of the first week of the new year. Is that right? Last day of the first, yeah. Wow. A little bit confused. Victorio's did a little like twitch. I saw steam coming out or smoke coming out of his ears. Oh man. Remember Austin Powers when the robot's head started exploding? That's funny, but it wasn't for that reason as Austin Powers. Austin Powers made the female robot's heads explode because she was so damn hot. I don't have that same effect. I'll see you guys tomorrow. Not tomorrow, on Monday. Have a great weekend. We got 2 awesome videos coming out. One on Saturday on the January effect, and the second one on Sunday on how to set SMART goals, and that's going to be an awesome video. I know because it's done and ready to go, and it's amazing. All right, see you guys on Monday. Take care. Have a phenomenal weekend to you and your family. We appreciate you. Hope you've enjoyed the first week together of the new year. We've been going strong. This is a 300 and hang on, I have to tell you this. The 368th morning market update. Wow. Yeah. And not the last. See you later. Might be the last. Yeah. Yeah, we've been at this for a long time. We've been doing the market analysis live Sunday webinars. Yeah, well, I think we've celebrated 260 of that one, which is weekly. Yeah, man. Yeah. Going strong. All right, trade pros. I'm just reminiscing a little bit too much. Let's get back in the lane and focus. There's a few levels I'm watching here on the S&P 500, including a new tool I'm playing with. That I'm going to slowly introduce to people. And what else? Nothing. I'm going to start with the S&P levels. Steven will talk about oil. Vicky will talk about NASDAQ. Let's jump into it. We got a great day today. I'm looking to step on it early and just be done. Take my profit and start thinking weekend mode. See you later. YouTube. Trade pros, hang tight.